government in a move to allow more foreign participation in our bond markets has hiked the FII limit in corporate debt as well as G-Secs. Let's take it across straight to our banking editor, George Chirin, who joins us live with more on the impact of this move. George?
Well, Sandeep, this move is really aimed at plugging the current account deficit, which is already at alarming levels. So, raising the corporate bond limit by $5 billion and the G-Sec limit by $5 billion is only aimed at that. We don't know, while the government has allowed this, we don't know when this is effective from. So, it's quite unlikely that you'll see the rupee react in any big way today to this announcement, simply because the rupee is behaving the way it is for very different reasons. Today is the last trading day, before which we go into an extended weekend. So a lot of people not wanting to get caught off guard, so squaring off positions. So you will see the rupee remain fairly weak in trades today. It's quite likely that the rupee will react positively on Monday when traders get back to their desks. But again, typically the reaction to such an announcement ought to be a stronger rupee, and in the fixed income markets it should mean that yields will go down, at least in the government securities market. The G-Sec limit typically is always used up by foreign institutional investors for the simple reason that the yield differentials between emerging markets and developed markets is significant, even if you adjust for rupee depreciation or or currency volatility. So G-Sec limits are going to get used up very quickly. On the corporate bond front, you typically see those limits get used up very slowly. But this is a sentiment booster, so it is going to work positively, but we'll have to wait to see what the exact outcome of that is on Monday. But we should ideally look at the yield on the 10-year bond. You should see some sort of a positive reaction on that front. We don't have the you should pull up that chart to see where that is trading at, because ideally yields should start trending downwards, even if the currency markets are going to take a little while to react. So on your screen, that's the 10-year Government of India's security. That's so the yield is not reacting very much. It is flat. 7.86 is where it had ended yesterday, so it's 7.87 is not much of a difference, but the reaction I'd imagine should really be seen in large part on Monday.